On December 15, 2023, the Securities and Exchange Commission released a staff review of the accredited investor definition as it pertains to natural persons. The Dodd-Frank Act requires this review at least once every 4 years. To start, who is an accredited investor and why does this definition matter? The accredited investor definition is used to determine who can invest in certain securities offerings. The purpose of the definition is to determine if investors have the necessary financial sophistication and ability to bear loss or the ability to fend for themselves. Under the federal securities laws, an individual can qualify as an accredited investor by meeting certain income or net worth thresholds, or by holding certain credentials or positions at the company. The review focuses mainly on 2 areas. First, the impact of inflation on the income and net worth thresholds for individuals to qualify as an accredited investor. For example, if the accredited investor wealth thresholds for individuals were adjusted to reflect inflation, the net worth threshold, which excludes the primary residence, would increase from $1 million to approximately $3 million. The income threshold for an individual would increase from $200,000 to approximately $607,000. And the joint income threshold would increase from $300,000 to approximately $911,000. Second, the review considered whether accredited investors have the financial sophistication, ability to sustain the risk of loss of investment, and access to information to be able to fend for themselves without the additional protections provided in a registered offering like an IPO. The review also discusses accredited investor participation in the exempt securities market and certain frequently suggested revisions to the definition. This video is intended to provide only a high-level summary of the review. The staff's review can be found on sec.gov. The review does not propose or recommend changes to the accredited investor definition. However, the current regulatory flexibility agenda indicates that the Commission may consider changes to Regulation D, including the accredited investor definition, in the coming year, and the Commission often considers staff reviews like this one in its rulemaking efforts. If the wealth thresholds in the definition were adjusted for inflation, the percentage of households that qualify as an accredited investor would decrease from 18.5% today to 5.5%, as compared to 1.8% in 1983. If you have feedback on the review, we encourage you to reach out to the staff to share your comments. If you would like to learn more about the accredited investor definition and related capital raising issues, we invite you to explore the resources available on our capital raising hub.